Hey everyone, welcome back to another video on the channel. Today's video I'm going to be covering, can you sell covered calls on the S&P 500 with a small trading account? And I'll just straight up say this, the answer is yes, but we're going to dive into how you can do that, how I'm personally planning on doing that. So yeah, let's get straight into it. So as you know, the S&P 500 is an index, so we're not going to be trading directly off the index. We're going to be using some sort of ETF that tracks the S&P 500 in order to sell our options. The most popular one, which I'm sure you know about, is SPY, SPY. And that is this ETF right here. Obviously great track record here, and this would be a reason why you would want to invest in the S&P 500, is because it has such great consistent returns. You know, I think the average rate of return is around 10%, not accounting for inflation. So that would be a reason why you would want to invest into it. But how can you sell covered calls on the S&P 500? So as you probably know, you obviously do need 100 shares of whatever you're trying to sell a covered call on. So in order to sell 100 shares on SPY here, which is the ETF we were talking about, you know, if we go ahead and plug that in, you would need about $42,000. And obviously this video is about small account strategies. How can you do this with a small account? And I'm not going into spreads. I'm not going to do poor man's covered calls, all these risky, weird ways of doing it. I'm going to be covering a safe way of selling covered calls, because most people don't have $43,000 to just drop on a single ETF or to invest at all, most likely. So yeah, we're just going to get straight into how you can do that, and I'm actually doing this myself, or at least I'm building up a position in order to be able to do this. So let's jump straight into it. So here in the portfolio, today is Tuesday, and we are up on the day, but if we head down here to ticker symbol SPLG, so SPLG, here you go, SPDR Portfolio S&P 500 ETF. This is made by the same people that run SPY, so same managers that manage the other ETF, the popular one, except you can see tracking the performance 1-to-1 here. The price is not $430. The price is only $49. So as opposed to SPY, where you need $43,000 to wheel that or to sell covered calls on that, whatever you are looking to do with when it comes to selling covered options or cash secured options, with SPLG you only need $4,900, which is still a lot of money, but $5,000 is significantly less than $43,000, and it makes it much more attainable to most investors to sell covered calls on what is probably deemed the best and safest index in the world. Alright, so here we are in TradingView, and I'm just doing this so I can compare the performance of these two ETFs side by side. Once again, they're run by the same people, managed by the same company that does SPY, also manages SPLG. So we're here on TradingView, and we're on the comparison feature, so we're comparing the returns of SPY compared to SPLG, and what you may notice straight away is there is basically zero difference. I mean, the line is practically hidden behind the other one. You can see, if I hover over it, you can see it flashes above the other one for a second, but if I turn this off, you can see literally identical performance, you know, 0.2%, 0.02%, over the course of the last year is the difference between these two. And this is on the 1 year time frame here. You can see if we go year to date, we can go 6 months, we can go 3 months, we can go 1 month, and it's still literally identical, as you can see here. And obviously we can go, let's go 5 years. Boom, there you go, 5 years. The difference is only 1.5%. And actually SPLG has outperformed SPY somehow. I'm not sure about the technicals behind that. I do believe SPLG has a lower expense ratio, which could account for something like this, but still, once again, and if we go to the all-time, obviously SPLG has not been a running ETF for as long as SPY, so we have to shift this over here to get an accurate comparison, and once again you can see 1-to-1 performance between these two, pretty much identical. In fact, they are identical. So that just goes to show that these two ETFs track the exact same stuff and perform exactly identical. The only difference is, one, SPLG has a lower expense ratio, so you pay less in exchange fees, or rather ETF fees, to the company running it, and two, SPLG just has a lower price, about 10 times less-ish, obviously a little bit different, but about 10 times less is the price of SPLG in comparison to SPY. So finally here, jumping back over to the option chain, we're going to head straight into this here to trade SPLG options. And the only downside I would say to SPLG options is they trade in 5-cent increments, and they only trade on monthly intervals, which I know, especially for me, was a big turn-off to a lot of stocks, was if they traded on monthlies. But I've come to find that the monthlies are actually not bad at all on here. especially if you're looking to just sell, 45 DTE contracts, which is the most safe way of selling options. 45 DTE out of the money contracts. So for people with that goal in mind, obviously you can sell shorter dated, and as time goes on, these strikes will become shorter dated, or expiries rather. But yeah, if you're selling 45-day expiration options, then you are good to go on this. And obviously you can see there's quite a lot of out of the money payment here. So while the volatility of the S&P 500 isn't nearly as high, or implied volatility rather, is not nearly as high as the majority of stocks. Obviously you can find way more volatile things that'll pay way more premium. What you're really getting out of this is the capital appreciation and the low risk and safety of this huge basket of stocks, while also still being able to sell calls and collect premium. So that is the ultimate thing about this, is that while yes, the premium isn't anything crazy, you can get 1% pretty far out of the money. Obviously you can see SPY would have to rally for you to end up losing money, or losing out on money you could have had. SPY would have to rally 5.5% in 50 days, which is possible, but you would end up making a lot of capital gains as well as some nice passive income of $43. So you can get a nice 1% there, which is really good actually. And of course, a lot of people, especially myself, I've fallen into the trap of high premiums. As you can see here, I'll just show you a quick example. I'm currently bag holding Medical Properties Trust, down about 44% on it, and the reason why I got into this trade was because of its high dividends and more so high premiums, because obviously you can see this is a 1 week out contract that's making me about 2%, so that is crazy returns. But this is not sustainable, this is not safe. If you want something that is safe, repeatable, and sustainable, you want to invest in the S&P 500, but if you want to add the ability to sell options when you don't have $40,000, then this is the way to go. So yeah, $5,000, you can go to the options chain. You can make about a good 1%, 0.5% a month easily doing this, being very conservative. You can see this is a 26 delta. If you want to be more aggressive, you can make probably around 1% per month without too much downside risk. You can see 2.5% of capital appreciation you have by selling this contract for $85 of premium. Obviously you could sell at the money, get $140 in premium, and you only end up missing out on gains if SPY goes up 3.5%. So honestly, this actually isn't even a terrible deal, especially if you maybe have a bearish outlook on SPY, or if you want to hedge your S&P 500 positions, then selling a close, at the money call could be the move for you. And by owning SPLG as opposed to SPY in a smaller account, it gives you this option ability that you would not have if you were to be just investing in SPY. So that is why I think this is a great ETF, especially if you're looking to sell options and have the ability, even if you're not looking to sell options, you have the ability to hedge your downside much easier and proportionally to your balance, as opposed to the S&P 500 through SPY. So that is why I like this ETF. And if you're looking to sell calls, you can even sell puts if you like to wheel stocks. I know a lot of you guys that watch my channel obviously like to wheel stocks. This is more of a covered call video because this is ultimately a great long-term hold. But if you are looking to wheel, you can also sell puts. You can see there's some great premium here as well. In fact, way better than the call option premium, because you are selling insurance to people for the downside. So there's obviously going to be greater premium on the put side. But you can see you can go all the way down here to the 44 strike and still get a decent premium. Obviously it's only 0.33% return on your capital, so not a great return percentage wise, but the point I'm trying to make here is that regardless, you can sell some good add-on on the options and still get some good passive income. So if you're maybe selling puts on margin, for example, that way you don't have to pay any interest, and you want to sell some far out of the money puts, and you want to do it on something that's very diversified like the S&P 500, then you could do it here and still collect a nice premium. And you can go obviously all the way up to, whatever you're comfortable with. Like here, you get paid 1%, and it would have to drop 7% before you even get assigned. So there you go. So yeah, guys, that is how you can sell covered calls, cash secured puts, wheel, whatever you want to do in terms of selling options on the S&P 500 index, but with a smaller account. Obviously 5,000 is still a lot of money, but it's much smaller than 40,000. You can see here myself, I'm building a position. I currently have 85 shares, so I'm about 15 shares away from being able to sell options myself. I've been buying about $55 every single day. You can see here's a daily buy. If I can go into the order history here, I've been doing this for quite some time now, and I had it originally in SPY, so it goes back even further to about the beginning of September. But yeah, you can see I've been buying every single day, dollar cost averaging, an amazing tool into an amazing fund, which I can ultimately sell options on. So that is the game plan for me. And I know a lot of you may find this video useful because I've always been looking for ways to sell call options on the S&P 500 myself. So this video would have been useful to me a while ago, so I'm just sharing that knowledge with you guys so that hopefully it can help you out. So yeah, thank you for watching this video, and I'll see you in the next one. Goodbye.